I am asked all the time if now is a good time to buy Bitcoin. It's a fair question. Nobody wants to buy at the top or sit on the sidelines and watch the price go to the moon. But there isn't a simple yes or no answer. It depends on your personal situation and, just as importantly, how you choose to buy. In this video, I'll walk through the main strategies, their pros and cons, and how to decide which approach might work best for you, whether you're starting small or looking to deploy a larger amount of capital. Instead of trying to predict the perfect entry, a better approach is to focus on choosing a buying strategy that matches your situation and temperament. And just a quick reminder, this is not financial advice. I'm sharing my own experience for educational purposes. Always do your own research and consult a professional before making financial decisions. Let's start with dollar cost averaging, or DCA. This means committing to buy a fixed amount, for example, $100 or 50 euros, on a regular schedule, such as weekly or monthly. Because Bitcoin's price changes all the time, the exact amount of Bitcoin that you receive will be different each time you buy. When the price is high, you'll buy slightly less. When the price is low, you'll buy more. The long-term outcome will be to average out your overall buy price. This approach works especially well for beginners who don't have a large sum of money to invest all at once. Perhaps you have regular income and you can set aside a fixed amount each time you're paid. In this case, using a DCA strategy is probably ideal for you. The benefits are straightforward. It takes away the pressure of trying to time your buys. If you set it up to execute automatically, which you should, it requires no mental energy or effort. It builds a consistent habit and it smooths out the ups and downs of the market. You also avoid the risk of going all in at a local high because your purchases are spread out over time. But there are some downsides as well. It's a slower, more conservative way to enter the market, and it can take some time to build towards your desired stack amount. If you do have a large lump sum available to buy Bitcoin, leaving it in fiat currency while you gradually DCA into Bitcoin means that inflation is reducing its value. So while DCA is excellent for small, regular investments, it might not always be the most efficient choice if you already have significant capital to deploy. Now let's look at the other end of the spectrum, the smash buy. This is when you take all of your available capital and put it into Bitcoin in one go. But first, if you're finding this video helpful, like and subscribe to my channel. Click the notifications bell so you know when my next video drops. And in the description, you'll find a link to my related post on Substack, where I dig into the details of each of the strategies covered and provide some examples and resources for you. So the main advantage of a lump sum buy is that you get full exposure immediately. You don't have to have your money sitting in cash on the sidelines while inflation erodes it away. Historically, lump sum investing in Bitcoin has usually outperformed dollar cost averaging, simply because Bitcoin has gone up so much over the long term and significantly outperformed other assets. But this strategy also has its challenges. If the price falls soon after your purchase, it can feel painful, and not everyone can handle that emotionally. A smash buy requires strong conviction in the long-term value of Bitcoin and the discipline not to panic sell if your entry point looks bad in the short term. Speaking as someone who was still buying near the peak of the 2021 bull market, I can tell you that watching it then drop to around 20K in 2022 definitely required some mental fortitude. So the great thing is that you don't have to choose either one strategy or the other. Many people use a combination of the two. Personally, that's the approach that I have taken. For example, if you have a large sum of money, you could put half of it in immediately and then DCA the rest over the next few months. Another approach is to increase the size of your DCA amounts. This still spreads out your purchases but gets your capital out of fiat and into Bitcoin faster. Some investors also stick to their regular DCA plan, but add occasional lump sum buys when the market experiences a pullback. This can work well if you're disciplined and willing to watch the market, but it does carry the risk of buying with emotions instead of logic if you aren't careful. If you're working with a large amount of money, it can be helpful to look at certain long-term charts before deciding your approach. For example, the 200-week moving average multiplier has historically highlighted times when Bitcoin has been very undervalued or overvalued. Another chart, the Pi cycle top, has been useful for identifying overheated moments near cycle peaks. Take a look at my video, Bitcoin Analysis for Dummies, for more information on some helpful charts that you can consider. None of these charts are crystal balls, but they can provide some context on whether Bitcoin looks stretched to the upside or whether it's closer to historical support levels. Just remember though, even these tools can't predict short-term movements with certainty. They are much more useful for looking at time horizons over months and years. Your temperament and experience also plays a big role in choosing your strategy. If you know that seeing a 20 or 30% drop in the Bitcoin price would cause you stress, then dollar cost averaging is likely the better fit. If you're comfortable holding long-term regardless of price swings, then a lump sum buy might make more sense. Beginners often get stressed by short-term price drops, for example, like the one we saw in April of this year when Bitcoin pulled back to 76,000. However, in my opinion, the longer that you hold Bitcoin, the more you get used to seeing these pullbacks, and after a while, you scarcely pay any attention. It's something you need to practice through long-term hodling. But the worst outcome is not that you buy at the wrong time, but that you panic sell after a drop. That's how people lock in losses. Remember that when the price drops, while you may have a loss on paper, it's not a true loss unless you decide to sell. I think avoiding that mistake is actually more important than the exact entry strategy that you use. There are a few other factors to think about. Transaction fees can be higher if you make lots of small purchases, depending on the exchange or the buying method that you use. You will want to take this into account when deciding how often to buy. And if you're buying in large amounts, it may be easier to work with an over-the-counter or OTC desk or brokerage rather than an exchange. It can be a scary thing to do large transactions on an exchange, and having the reassurance and guidance of a personal broker can be invaluable. Your personal situation also matters. If you're sitting on the proceeds from selling a property or receiving an inheritance, for example, holding that money in fiat for months or years while you DCA in slowly can expose you to significant inflation risk. And for people living in countries with high inflation, waiting out in cash to DCA can be even more costly than in places with more stable currencies. In those cases, there may be no question of a DCA versus lump sum buy, because the goal is to exit the inflating currency as fast as possible. So as you can see, there isn't one correct answer to the question of whether now is a good time to buy Bitcoin. For small amounts coming in from a regular income, dollar cost averaging works very well and keeps things simple. For large amounts, you may want to think about a smash buy, a hybrid approach, or even a larger interval DCA. The mistake isn't usually buying at a less than optimal time. It's letting paralysis by analysis prevent you from buying at all. The key is to make a plan that you can stick with without emotion. Whether you DCA or smash buy, the long-term goal is to buy, hold, and not panic sell when the price goes down. If you can do that, then you're already ahead of most people. If you enjoyed this video and you want to get some extra info and resources, check out the linked post in the description below. Make sure you subscribe to my channel, turn on notifications, and check out the suggested video that has just popped up on your screen that YouTube has picked out for you especially. Thanks for watching, keep stacking, and see you in the next video.